Hello, today I'm going to be presenting on Hello, today I'm going to give a short presentation on Ventures Corporation Limited, which I had used fundamental analysis to evaluate the company content and determine whether or not firstly the company is worth investing. At the company's background, its management team, the competitors, then followed by performance indicators, financial stability ratios, valuation, and last but not least, the SWOT analysis. Ventures Corporation Limited is a company that provides contract manufacturing services to electronic companies worldwide. The company was founded in 1984 and was listed on SGX in 1997. The company has more than 12,000 employees and has offices in more than 40 countries across Asia, North America, and Europe, with its headquarters located in Singapore. Their services include manufacturing, design, engineering, customization, and logistics. Next, we will look at the management team of Venture. The management team is led by Mr. Wong Nick Leong as the chairman and CEO, and he has received many awards. Next, we will look at the competitors. Ventures Corporation operates mainly in the design, manufacturing, and distribution industries, and its competitors include Flextronics International, Foxconn, ExcelPoint Technology, Creative Technology, UMS Holdings, SMRT Engineering, and Broadway Industrial Group. Now we will look at the quantitative factors of Ventures Corporation, along with two of its competitors, UMS Holdings and SMRT Engineering. Under the performance indicator, we will look at the company's revenue and its competitors. Revenue is the amount of money brought into the company through the sales made. For Ventures Corporation, they recorded a revenue of 2329.6 million, which round up to 2330 million for the financial year ended 2013, a decrease of 2.43% compared to year 2012. As compared to its competitors, there was a steady decline in sales for Venture over the recent years. This is probably due to the strong competition from electronic manufacturers worldwide such as Foxconn and Flextronics. For its operating margin, it measures a company's pricing strategy and operating efficiency. It is the percentage of revenue that a company generates that can be used to pay investors and tax. For Ventures Corporation, there was a decrease in operating margin by about 3.78% from year 2012 to 2013. As compared to both competitors, Ventures shows a much consistent operating margin. The decrease is probably due to the changes in labor laws and policy changes in their overseas factories. For return on equity, it shows how much profit a company generates with the money shareholders have invested. For Ventures Corporation, they recorded a decrease on ROE by about 4.99% from the year 2012 to 2013. Unlike its competitors, there was a steady decline in Ventures' return on equity over the years. This is due to the much lower asset turnover. Looking at Ventures Corporation financial stability, we will evaluate the company based on two ratios, current ratio and interest coverage ratio. For its current ratio, it is a ratio that measures a company's ability to pay its short-term obligation with its short-term assets such as cash, inventories, and receivables. For Ventures Corporation, they recorded a decrease in their current ratio by about 2.77% from financial year 2012 to 2013, which you can see from the graph as shown. There was a slight increase from 2010 to 2011, but it started to decrease from the year 2011 onwards. This is due to the 2012 acquisition of Venture's new property known as the Block 5006 Tech Place 2, which is located at Ang Mo Kio Avenue 5. For its interest coverage ratio, it is used to determine how easily a company can pay the interest on its outstanding debt. If it is below 2, it indicates that the company is not generating enough revenue to satisfy the interest expenses. For Ventures Corporation, they reported an increase in their interest coverage ratio by about 34.79% from the year 2012 to 2013. There was a decrease from year 2010 to 2012, but the ratio and dividend increase, as you can see from the graph. P ratio is the year 2012 onwards of the companies. It shows that the company has a much better stable financial health. For Ventures Corporation, there was an increase by about 6.27% from the year 2012 to 2013. As compared to its competitors, Ventures PE ratio shows a steady increase over recent years, and this will definitely attract the growth investors. For its dividend yield, it is a ratio that shows how much a company pays out in dividends each year relative to its share price. It also means that the rate of return on investment for a stock. Looking at Ventures dividend yield, they reported a dividend yield of 6.51% in 2013. This is a slight decrease of about 4.55% from year 2012. There was an increase from 2010 to 2011, however, it started to decrease from year 2011 onwards. This is due to the decreasing revenue over the recent years, and as compared to its competitors, their data does not fluctuate much. Next, we are going to look at the qualitative factors, which I have done a SWOT analysis of Ventures Corporation. There are two factors. The first one is that they have a much wider range of services than compared to their competitors. Venture offers services from manufacturing, product design and development, supply chain management, and provide high-end solutions. Their customers are mostly high value and they have a much higher chance of revenue growth. Secondly, they have a much diverse vertical exposure with more exposures to different sectors of the industries due to the wide range of services offered. Through this, they have a much higher chance of capturing opportunities, and this also reduces vulnerability and dependence on just one sector. For venture weaknesses, the two factors are its weak financial performance and a much lesser scale of manufacturing. First of all, they reported a much weaker financial performance over recent years because of the decline in their revenues. This can mean that there are weak resources allocation among the company, and this might impact future investment and also can affect their financial growth. Secondly, as compared to their big competitors such as Foxconn and Flextronics, Ventures has a much smaller market share in the manufacturing industry. This can lead to a much smaller customer base, and there could be risk of customers failing to provide business because of their poor financial performance. Looking at the opportunities, there are plenty of room for Ventures Corporation to grow as well. First of all, there is an increasing trend of outsourcing among electronic companies over recent years, and there's also an increase in demand for electronics manufacturing. Secondly, the design and manufacturing services that Ventures provide can be an opportunity for revenue and market share growth. As for Ventures threats, there are three main factors that can affect them. Firstly, due to the increasing number of competitors in the market, the industry becomes highly competitive. There are numerous electronic manufacturers across the globe like Foxconn, Flextronics, and ExcelPoint, and this company has a much greater financial resources than Venture. So they have the ability to lower their manufacturing costs in a bid to attract more businesses. Secondly, exchange rate fluctuation can also affect the company as well. The rapidly changing technology Ventures has a number of investments. The products that venture in foreign are highly complex subsidiaries, product life cycles, net assets, which means that a product can be manufactured for a period of time. This can indefinitely affect the value of the company's foreign assets. They will be influenced and also by technology changes and often have to allocate resources like new machinery or equipment in order to meet the demands of the industry. This can in turn affect the company's production fully. So, in conclusion, with the upcoming technology changes and the increasing number of outsourcing electronic companies, it will be recommended to invest in Ventures Corporation. Although the company might show a decline in their revenue over the recent years, the wide range of services that they offer, such as product design, e-fulfillment, and manufacturing, are attractive to entrepreneurs and new electronic companies alike. Hence, there will be plenty of growth opportunities for Ventures in the future. With that, I have come to the end of my presentation.